As promised, we've got Shalabh Saxena with us of Spandana Spurti. Let's talk a little bit more about their growth outlook, view on asset quality, as well as net interest margins. Good to have you on board. Thanks so much for joining in. Now, given that you had earlier spoken about, a sort of a vision for the year ahead for 2028, you had hinted into that. Can you give us a little more perspective? Put that down to numbers. What exactly does that look like in terms of your growth projections?
Morning to you and all your viewers. First of all, about 6 quarters back, we had come out with a Vision 25, which articulated a very clear view on we as an enterprise, where are we going to exit next year, end of next year. To your specific question on the Vision 28, it is still in the works, and I think we should take another 2 weeks, a week and a half to kind of crystallize. Once that is done, then we may share it with all.
In the light of what we've heard from RBI for unsecured loans, for the category which you represent, which some would also argue that has a deep dependence on the unsecured borrowing, do you see there a concern which could brew up? It may not be for your firm, your company, but it could be for the sector per se, because Reserve Bank of India, at the vantage point they're sitting, they have access to a lot of data which you and me don't have.
It's a fair point, and I think what is being steered is a bit of a moderation, Nikunj, in my view. There's always, whenever you go in hindsight, you go back whenever there's a regulator intervention or a nudge. It's always good for the larger cause of the industry. To the specific point on microfinance and PSL, while yes, it is out, but we are also cognizant of the fact that we need to be cautious, and accordingly taking all steps to ensure that we moderate and calibrate the entire growth story of the industry and the company.
There is a feel-good factor which seems to be coming back in the rural economy now. It's a feel-good factor. It has not translated into any real uptick so far. But when we spoke to HUL last, or the indications what we've got, let's say from auto companies, they're saying that the rural economy is coming back. Now with the election inside, government spending is going to increase, rural economy is going to benefit. What does that mean for your business?
Nikunj, see, this is the last mile delivery business where even for a complex country like India, where the distribution is very, very, very far, and it is deep in the country, in the rural country, for the rural India that we are talking about. Any euphoria is always good. However, what we are experiencing over the last 2 to 3 quarters is some bit of moderation from the time when we came out of COVID as a country. So, which is good for the industry if you were to ask me, because it's very important that this unsecured lending to the bottom of the pyramid is, it kind of works one step at a time and not really jump the whole hop. So, to that extent, what we are picking up is a bit of a standardization or a moderation, as I would say. On the quality side, things have stabilized and it is on the improve. So overall, at a framework level, we are seeing some bit of stabilization. Not really, maybe about 3-4 quarters back, we were slightly, as an industry, we were slightly, going at a slightly faster pace, which now I think things have moderated. To your question in terms of how does it augur when there's a continuity in the political establishment and a lot of investment in the infrastructure. I think we've seen the income levels of our customers rising because of all of the things that you've mentioned, and I think the going should continue to go. I mean, it should move in the right direction over the coming quarters and years.
Graphics here, and that. It's remarkable. Collection efficiency, NPAs and your AUM. 6 quarters. We have the 6-quarter data. It'll just come up first. Let's look at NPAs. Then let's look at AUMs. What you've done is you managed to bring the NPA levels down and you managed to take the AUM higher. Do you think a lot of easy, low-hanging fruits have been plucked, which is that you've been able to repair your book because what you inherited when you took over was essentially inefficiency, which you managed to pluck. You managed to grow your book, but that was largely because of the base effect. So do you think, if I may use the English term, the low-hanging fruits have been plucked now?
So, Nikunj, low-hanging fruits in unsecured is a bit of always a contradiction, because even while they are the so-called low-hanging fruits, you still have to be very, very cognizant of the risks which are associated in managing this business. I have been maintaining that this business is not about assets. This business is all about managing risks. So in that context, yes, to most of the questions that you said, so we cleaned up the book, we got the management team in place, we've rejigged our model to an extent. There's still some work unfinished, which will take another 2 to 3 quarters, but we are broadly there. And at the same time, we've been able to kind of reasonably capitalize on the opportunity which was available in the market. What we've been as a team very cognizant of is that we really balance this whole trajectory, and we kind of ensure that we really don't go overboard. So asset growth coupled with managing risks is what we're concentrating. We've been Nikunj, highlighting that uh, 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 loss rate of sub of 2%, NIMs of anywhere around 12.5, 13 to 13.5, and a steady growth rate at an AUM level now that the number that we are, AUM growth of anywhere around 25% is a very much doable thing in the next couple of years.
Okay, and I just wanted to also understand that given that 44% of the funds come from banks, 20% over 20% from NBFCs, I just want to know what the outlook is in terms of what you're going to do to offset any cost of funds pressure. Are you going to look to pass that on?
At this point in time, from whatever we've heard, and given the fact that all our entire business is PSL led, we haven't seen or heard any impact either from the lenders or even otherwise. So, as far as the cost of funds is concerned, I think, we as an enterprise have peaked out on the cost of funds, assuming the repo rates, etc., to kind of go in the way we are going, as a country. I think, we are fine. Another 2 to 3 quarters, if we see things stabilize, we might look at, probably passing on the benefits, not the other way around, passing on the benefits to the customer.
Run this tight ship of this current tight ship without raising capital?
Yes, so until exit of next year, as per our calculations, we should be around 25-26% CRAR. Currently, we are at about 37%. So we are good on the capital liquidity. Nothing until next year. Once we hit in the neighborhood of about 25%, we might look at a growth capital, but that's still, it's early days at this point in time.
Exit of next year means next financial year, I would imagine, right? That's FY25.
That's correct.
So 15 months, you will at least 15 to 16 months, you will not look at raising capital.
Correct. That's correct.
And when you see a large election cycle play out, psychologically, what does that mean for perhaps the unsecured loan category? I mean, do they delay their borrowing? Do they extend? I mean, how does it work in terms of the borrower psychology?
Nikunj, this industry now is a 2.5 decade old industry. So we've gone through multiple cycles in terms of, issues. If I go back about 10, 12, 13 years back, the situation then to now has changed dramatically. From a maturity point of view, the market has evolved. And when I say market, it includes the financiers and it includes the customers. So people earlier, during the election, people used to think that, there'll be a promise of waivers, etc. All of that is a thing of the past. At least to what, when we hear our customers, and there's a lot of awareness which has gone from the industry into counseling the customers that this is a loan which doesn't really attract that so-called waiver in if at all there is an announcement. So there's a sufficient maturity at a customer level that we have experienced, and hence there's a lot of stability. Elections come and go. We've just seen elections in the 4 states. Nothing really to worry about is what I would say, because of the reasonable maturity in the environment.
Okay, fair enough. Thank you for giving us that clarity. Good to have you on board and giving us a sense as to how overall business is shaping up for Spandana Spurti.